Researchers at Bloomberg Intelligence project that the generative AI market will experience significant growth, skyrocketing from $40 billion in 2022 to $1.3 trillion within the next 10 years. Looking at Nvidia's astonishing performance just this past year, you should be convinced that investing in AI has huge potential. But how do you know which business models in this wave of technological innovation will see the most growth? Thankfully, you can minimize the risk of picking wrong by selecting an AI exchange-traded fund instead of investing in individual stocks. So here are the 5 best AI ETFs to help you grow your portfolio and take full advantage of the rapid advancements in artificial intelligence. And stick around till the end for my pick of the best AI ETF you can buy right now. Just so you know what we are talking about, AI ETFs invest in companies positioned to benefit from the increased adoption of AI. These companies fall into 3 categories: enablers, engagers, and enhancers. Enablers are suppliers of essential components of AI development. Think semiconductors or cloud computing infrastructure. Taiwan Semiconductor and Microsoft are well-known enablers. Engagers integrate AI technology into their primary products. For instance, ServiceNow uses AI in its cloud-based workflow system to improve functionality and efficiency. Enhancers support the AI ecosystem indirectly. These are companies like online advertisers that use AI to forecast online the popularity of games and content before production. My list of the top AI ETFs was selected based on their favorable expense ratios, net asset values, and portfolio diversity. They meet the following 3 criteria: expense ratio not exceeding 0.65%, over $250 million in net assets, and a portfolio with a minimum of 70 distinct stocks. First on my list, iShares Robotics and AI Multi-Sector, IRBO. IRBO currently trades at $33 per share. It has an expense ratio of 0.47% and currently holds 110 different assets. IRBO follows the NYSE FactSet Global Robotics and AI Index. The index comprises companies from developed and emerging markets that are expected to grow in tandem with the growing use of AI and robotic technologies. IRBO's portfolio includes businesses that develop or use AI and robotic technologies. In this ETF, no single stock makes up more than 3% of the portfolio. This approach helps avoid over-concentration in larger, potentially overvalued stocks, like Nvidia. The downside is that when a major company surges, IRBO shareholders experience a smaller impact. However, this low weighting allows shareholders to benefit more from rallies in smaller stocks. ETF number 2, SPDR S&P Kensho New Economies Composite ETF, with ticker symbol KOMP. Currently trades at $46.22 per share, has an expense ratio of 0.2%, and currently holds 440 different assets in its portfolio. KOMP follows the S&P 500 Kensho New Economies Composite Index, which features companies specializing in groundbreaking advancement in automation, connectivity, robotics, AI, and processing power. This ETF abandons the common emphasis on large-cap tech stocks, reducing investors' exposure to giants like Apple, Nvidia, and Microsoft. The fund's largest holding is LDOS, Leidos Holding, which operates in defense and aerospace, providing AI, cybersecurity, and digital services to its clients. Other prominent positions in KOMP include the drone company eHand Holding, Coinbase, and Teledyne Technologies. KOMP's portfolio consists of 84% US stocks, with exposure to international markets such as Brazil, Canada, China, and Hong Kong. ETF number 3, Fidelity MSCI Information Technology Index, FTEC. Now, FTEC currently trades at $155.49 per share, and has the lowest expense ratio of any of the ETFs on our list at a meager 0.084%. Its portfolio stands at 305 different companies, and the year-to-date return is 13.09%. MTEC mirrors the MSCI US IMI Information Technology Index, which favors US large-cap equities. The ETF's top holdings feature S&P 500 companies such as Microsoft, Apple, Nvidia, and Broadcom. These tech giants have the financial strength to make substantial investments that can propel significant advancements in AI capabilities. Semiconductor firms represent almost 30% of FTEC's holdings, with system software stocks making up 25% and technology hardware stocks constituting 20% of the portfolio. Number 4, Defiance Quantum ETF, QTUM. Now, QTUM currently trades at $60.79 per share and has a low expense ratio of 0.4%. Its portfolio stands at 70 different companies, and the year-to-date return is 14.44%. Now, QTUM follows the Blue Star Quantum Computing and Machine Learning Index, which is a financial index that tracks the performance of companies involved in the development and utilization of quantum computing and machine learning technologies. The Defiance Quantum ETF portfolio centers on companies that advance quantum computing, pushing the boundaries of AI and machine learning capabilities. Included are hardware manufacturers, companies that provide connectivity solutions, and big data management firms. Micron Technology, the microchip maker, and MicroStrategy, which provide business intelligence, are included in the top holdings. The final AI ETF you should consider buying is also the one I consider the best: Vanguard Information Technology, VGT. Now, VGT currently trades at $524.64 per share. It has a very low expense ratio of 0.1% and currently holds 316 different assets. So far this year, it has returned 13.98%. VGT mirrors the MSCI US Investable Market Information Technology Index and invests in top technology companies. Although the fund and index do not specifically target AI stocks, their emphasis on technology inherently provides substantial exposure to AI advancements. Like other Vanguard ETFs, VGT is recognized for its high quality and low expense ratio. This diversified technology fund includes key AI players like Microsoft, Nvidia, and Broadcom. The top 10 holdings, which accounts for over 50% of the portfolio, all have significant involvement in AI. VGT is also the biggest of the 5 ETFs on the list and has an impressive track record, delivering an average annual net asset value return of 19.8% over the past decade. The AI revolution is unfolding rapidly, and these 5 ETFs provide a smart way to tap into this transformative trend. By investing in these AI ETFs, you can minimize risk while benefiting from the technological advancements driving the AI sector. These funds offer diversified exposure to companies leading in AI development and applications, and will ensure that you don't miss out on the potential growth of this exciting market. Remember, while individual stocks like Nvidia have shown impressive gains, AI ETFs provide a balanced and strategic approach to harnessing the power of AI in your investment portfolio. Please leave us feedback and share your thoughts in the comments. If you found this information helpful, like, share, and subscribe to the channel. Until next time, stay financially savvy. We'll see you in the next video.